Hello friends, welcome to this May edition of Monthly Viewpoints. Globally, we have seen a rally in equity markets and even Indian markets are up more than 5% over the past month. Markets have seen a broad basing with mid caps and small caps outperforming large caps. On the sectoral front, real estate, autos and PSUs have outperformed. On the global front, the concern has been on inflation and interest rates, and the Fed in its last meeting raised rates by 25 basis points to take the Fed policy rate to 5 to 5.25%. However, Fed chairman indicated that rate may be at the peak for the current cycle, and going forward, markets are expecting a decline in rates after a pause. In India, the macro conditions continue to improve as indicated by high frequency indicators such as GST collections, e-way bill collections, the manufacturing and services PMI, as well as services exports. The good news is that inflation in India is already on a downtrend. As far as earnings are concerned, we may see some pressure on earnings in sectors like consumer discretionary due to the higher interest rates, as well as some pressure on the global cyclicals. However, we are quite confident that FY24 earnings should be in the 14 to 15% earnings CAGR, which is higher than the long-term average. Earnings will be driven mainly by the banking, auto and consumer staple sectors. In case of FPI flows, we have seen a rebound in the FPI flows over the past month, and in April alone, India has seen FPI inflows of more than $1.4 billion. Given the rally in equity markets, the valuations are slightly above the long-term average. However, that is not much of a concern. Currently, most of the risks seems to be priced in, and we don't foresee major downside in Indian equity markets at the current time. Over the medium to long term, India seems to be relatively better positioned than other large economies given the supportive demographics, the government reforms, as well as the boost being given to manufacturing. With interest rates having moved up and expectations of returns from equities having moderated, fixed income is also looking attractive. As far as asset allocation is concerned, it would be ideal to have exposure to different asset classes such as domestic equities, international equities, fixed income and gold in an investor's portfolio. As far as themes are concerned, we continue to remain positive on the domestic focused themes such as banking and financial services, consumption and manufacturing as compared to the global cyclicals. We provide a basket of funds for investors to choose from. Thank you and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।